Hi everybody, in this video we will be looking at Kaspi. Let me tell you from the beginning, I really like this company, it is already my number 2 position in my portfolio. The idea is yet another clone from Mr. Cloner himself, Mohnish Pabrai. I want to thank him for that. I saw the company on the Vegans Fund list of holdings and I immediately started digging. The first thing that catches your eye is the dividend yield. When I originally bought the company, it had about a 10% dividend yield. I released the first part of my Kaspi analysis on my Patreon on March 29th. The stock was at $72 back then, and the dividend yield was even slightly higher than 10%. Since then, the stock is up about 20%, so the yield is now around 8%. Now, this company is quite special. They are a super app in Kazakhstan, but you can think of Kaspi as a company with 4 legs: payments, fintech, marketplace, and their newest addition, Hepsiburada. Hepsiburada is a marketplace in Turkey that Kaspi recently bought to expand outside Kazakhstan and grow in Turkey. The other 3 legs are in Kazakhstan. This is going to sound strange if you don't know Kaspi already, but Kaspi has incredible dominance in Kazakhstan. You can think of their payments platform as MasterCard and Visa on steroids. You can think of their marketplace as Amazon, and you can think of their fintech business as a mix of Bank of America and Klarna. Kaspi does it all. On the screen, you can see some figures that show this dominance. In payments, 79% of Kazakh people said they know about Kaspi. The nearest brand is at only 6%. Similar things can be said for other segments as well. Kaspi is multiple times larger than the nearest brand. So in Kazakhstan, you use Kaspi for your payments, you use Kaspi as your bank, and you use Kaspi for e-commerce and even in-store shopping with m-commerce. So it is a super app with an incredible mode in its home market. And now it is expanding in Turkey. But what are the results like? I prepared the graph you see on the screen. It shows their consolidated revenue and their net income in dollars over time. You can see the exchange rates on the bottom right. The Kazakh business has been incredibly profitable. Their net margins were over a whopping 40% for 4 years straight before they started consolidating Hepsiburada, which is a loss-making company with a huge amount of revenue. That affected the 2025 results. Kaspi said they are going to run Hepsiburada at EBITDA breakeven. I am not really underwriting Hepsiburada in my thesis, but that acquisition has been hated so much by the market that the stock went down about 50% in a year and a half after the acquisition. They paid around $1.1 billion to acquire a 65.4% stake in Hepsiburada, and they stopped the dividends for a year to finance this acquisition. But as you can see, the company is making $2.1 billion annually in net income, and they have now restarted the dividends. In fact, I recently got paid about $1.80 per share as a quarterly dividend. So they have a payout ratio of about 64% as well. Their PE is currently around 7 and EV/EBITDA is only around 4.5. And go back and look at their growth. From 2021 to 2024, before the Hepsiburada acquisition, they doubled revenue and net income in 3 years in dollar terms. So that is real growth. They did this while the payout ratio was over 60%, except for 2022 when it was lower, but that year they combined dividends with more buybacks, so it was still a lot of shareholder returns. And unlike many US tech companies, Kaspi has no meaningful stock-based compensation plan, so they are not diluting the existing shareholders. In fact, what is even better is that Kaspi is an owner-operator company. About half of the stock is owned by insiders, and if you include the borrowing funds, then it is about 3/4. Recently, Tencent, likely the best global super app company, announced an investment in Kaspi. And alongside Tencent, Mikhail Lomtadze, the CEO, also bought more shares of his own company. I really like founders who use their own money to buy shares in their own company. And Mikhail has no stock-based compensation plan in his name. He gets paid dividends from his ownership and he uses those dividends to buy more shares in his company. That is dedication. I really like that. The thing about Kaspi that most investors miss, in my opinion, is that all 3 main segments make each other stronger. Think about it. Kaspi is the market leader. Everybody uses Kaspi. What happens is you give Kaspi data from your payments, your e-commerce history, your m-commerce history, your bill payments. Even when you pay for gas for your car, and so on. They have been gathering an incredible amount of data for decades now. All that data helps them to underwrite credit much better. In 99.9% of the cases, it only takes Kaspi 6 seconds to decide on a credit request because they have an incredible amount of data and very capable algorithms on top of that data. So, the fintech segment is much more valuable inside Kaspi's ecosystem. The same thing is true for marketplace. At checkout, Kaspi can offer you a buy now pay later option. And it is not just on the consumer side. Kaspi also works very closely with merchants. They are so embedded that merchants even use Kaspi to do their taxes. Kaspi knows the merchant's volume history, payments history, working capital needs, and everything else. They can offer working capital credit exactly when the merchant needs it. And because they have so much data, they know what to offer, at what terms, and to whom. And the risks with these loans are quite low. Their underwriting models are built on data from over 231 million loans, 44.5 billion transactions, and 54.7 billion user sessions over only the last 3 years. This is visible in their recent results as well. In the first quarter of 2026, Kaspi's average net loan portfolio grew 23% year over year, but cost of risk was only 0.7%. Non-performing loans increased to 6.6%, but management explained that this was partly because the mix is moving toward lower risk merchant finance and secured car loans, where the chance of collection is much better. So they keep more of these loans on the balance sheet instead of writing them off quickly. Now that we've covered the credit risks, let's look at the upside of the fintech operations. The fintech yield is basically the revenue Kaspi earns from its loan book. In simple terms, it shows how much interest income and fintech fees Kaspi makes compared to the average size of its loans. In 2025, Kaspi's fintech yield was a whopping 24%. That is a very attractive number, especially because this is not coming from blind lending. The fintech business is still extremely profitable, even while funding costs in Kazakhstan are currently high, and even while the management is being disciplined with new loans. Moving on, payments is where Kaspi makes most of its net income. As you can see from the graph that I prepared, Kaspi's payment segment has grown at a CAGR that is almost 27% over the last 5 years. They maintained net margins of around 60 to 65% throughout the entire period, and they made $857 million of their $2.1 billion net income from the payment segment. This business is simply too good. The numbers speak for themselves. Now, as you can tell, there is a lot to uncover here. In this video, I am only showing the general thesis. If you want to see the full deep dive, I made part 1 of the Kaspi deep dive free for only 1 week, so you can read it for yourself. Judge the quality of the work and decide if it is useful for you. Part 1 is already a series report by itself, but Part 2 is available inside the Patreon library. That is where I go deeper into the business, the valuation, the risks, the upside, and how I think about the company as an investment. My Patreon is only $25 a month, and I honestly think it may be the only deal in town that is better than Kaspi at these prices. You don't only get Kaspi, you get access to the full library that I have written over the years. Deep dives on multiple companies, my portfolio positions, where I see value, and how I think about the market. And if you don't like it, you can cancel anytime before the next renewal. The reason I am not making so many YouTube videos here is because most of my focus goes into the quality of the reports I write on Patreon. I am getting great feedback from subscribers, and if you like this video so far, I think you will love what you find on Patreon. Now, going back to Kaspi, let's do a final conservative sum of the parts analysis. For this, even though Kaspi paid over $1 billion for Hepsiburada, let's ignore it completely. The image you see on the screen is for entertainment only, so always do your own research before investing. But, in my opinion, going off full year 2025 earnings, a 20x multiple for a business like Kaspi's payments segment is conservative. If that business was in the United States and traded on Nasdaq, I think the multiple would be closer to 50x. But I assigned a 20x multiple to the payments earnings, a 9x multiple to fintech, and a 10x multiple to marketplace, while writing off Hepsiburada completely. Now, let me remind you again, Kaspi without Hepsiburada has an incredible moat, strong links between the segments, and a net profit margin over 40%. So with that approach, the figure I get to is over $30 billion against a market cap of $16.2 billion and an enterprise value of $12.8 billion. So, as I said at the beginning, Kaspi is my second largest position. I really like what I am seeing here. While I wait for Mr. Market to recognize the quality of the business, I am being paid a 10% dividend yield on cost. Other than the macro risks that come with being a Kazakh company, I like what I am seeing here. And in all honesty, without some hair on it, the company would not be this cheap in the first place. I don't care too much about the macro risks right now. When people got scared out of Turkey, I bought Turkish stocks, and now Reysaş is a 10-bagger for me. In 2022, I bought Meta and other US big tech when people got scared out of them. The trick is to separate the noise from the signal and come to your own judgment. That's it for today's video. I hope you liked it. Please do YouTube things here, especially comment if you watched until the end. It really helps the channel reaching a larger audience, and it will only take 10 seconds to say thanks and send it. Check out my Patreon if you want more content, and take care of yourself. Bye.